As gold hit the much anticipated $2,000 an ounce this week, our next guest warns that more volatility is coming up. Joining me today is Gero, Managing Director of RBC Wealth Management. George, it's always a pleasure to have you back. Welcome.
Sure. And thank you for having me. I think you are doing the investor a great service.
Thank you very much, George. It's always a pleasure to have feedback from our guests. Now, George, you were writing recently in your note that volatility is expected. Can you explain what kind of volatility, how much, and why we're getting it?
Well, we're getting volatility for a lot of reasons. I think the most important reason is that we have a lot of people not really fully understanding the value of owning gold over the long term. Gold actually has a 5,000-year history of being a store of value to maintain purchasing power. However, in its many forms, gold has many different purposes. And many traders use gold as a hedge against stock fluctuations, bond fluctuations. Other people think that gold is a haven from political problems, cities in tension, governments in tensions, such as the U.S.-China tensions, and other people use gold as a possible defense against loss of purchasing power, just as they did many years ago after World War II, after World War I, when currencies lost value and you had major dislocations. So gold is a misunderstood asset by many and a well-understood asset by others.
George, you've worked for more than 3 decades on the floor. In your earlier days trading, did you work with gold a lot?
I worked mainly with gold, and I specialized in trading gold against silver and gold against platinum. And I traded platinum outright, silver outright, gold outright, and I traded copper outright for 35 years on the New York commodity exchange floors. Although I was also a member of other commodity exchanges. I was on the board of the Coffee, Sugar, Cotton Exchange. I was on the board of KNIFE, that used to be a futures exchange for currencies. And I'm still on the CME PAC board, and I'm still on the COMEX Governors Committee of the CME.
So what drew you to the metals, George? I mean, you could have picked any asset class to launch a career, but you stayed with the metals.
Gold saved my life when I was a child. As you may not have known, actually, I was born in England of Hungarian parents and wound up in Budapest after I was born. And I found out when I was a very young child, at the age of 2, in Hungary, I was an enemy of the state for having been born in England and having a background of Jewish parents. And later on, the Jesuits saved my life. I was in a Jesuit boys' home for some time. My father had been in and was in Portugal. He was a banker, and gold coins and gold bars helped save our life because my mother, my sister, and I were able to get out of Hungary in 1945 with gold coins at the border.
That's an amazing story, George. I mean, a lot of people today are talking about potentially, things getting worse in the world, and people are buying gold coins and bars and jewelry for that exact reason, to protect against the possibility of having to flee their homes under extreme circumstances and having something to barter with. How could you compare today's situation to the worst that you've seen in your lifetime?
Well, this is a very different type of a worst situation one can encounter because we have the pandemics. And this is a game changer and a changer of everything that you have ever dreamt of and thought of, because this is an enemy of all, and it needs to somehow be curtailed. And in doing this, economies have changed. Shutdowns and lockdowns have prevailed around the globe, and it changed economics, and it changed export and import, and is increasingly heavy debt burden for many countries, and increasingly heavy debt burden even for us in the United States. And so many investors, understanding this, are buying and have been buying gold. And in fact, it's interesting to note that for the past 27 days straight, the ETFs had an inflow of gold and, of course, some silver, which used to be poor man's gold, has now graduated to be a companion of gold.
Mm-hmm. We're going to talk about your gold price forecasts in just a minute, but let's go back to the economy now. You mentioned that everything has changed in the wake of the pandemic. Now, how has sentiment amongst, first of all, your clients changed, and how has your personal sentiment in the markets changed just over the last 3 months since the March lows?
Well, for the past 3 months, we have seen a new crop of investors trading gold, the momentum traders who believe the trend is my friend, and that has worked well for them because gold just this year is up about 20% or more and has performed as well as any asset. And of course, gold has developed more interest ever since we started a fair, orderly, important trading market in the United States on the COMEX. And I have to tell you that that has become the most paramount, foremost gold market in the world for now. And gold does trade pretty much around the globe. It trades in the Far East, and it trades in Europe, and it trades in the Middle East, and it trades here. I was lucky enough to be one of the board members who went to Dubai to help set up the Dubai Mercantile Exchange. I was also lucky enough to be one of the board members that went down to Rio de Janeiro in Brazil and helped also set up part of the gold trading. And I think that gold is going to continue to be one of the most important assets for portfolio managers around the globe.
When you say most important, one of the most important assets for portfolio managers, can you elaborate on that? What role specifically does gold serve in your portfolio, or how should it serve a portfolio manager in general?
Well, gold, 10 to 15% allocation over the course of time has helped stabilize many portfolios. There are portfolios, of course, that successfully trade growth stocks, that trade interest rates, fixed income, and gold being a 10 to 15% addition to a portfolio has been very helpful to most investors who have embraced this.
I was going to say, would you agree with the statement that gold is a hedge instrument?
Gold is very much of a hedge instrument of many kinds for many types of traders. Some people use gold now to hedge against political outcome, which is possible and probable to be a good hedge between U.S. elections upcoming in 90 days. Gold is used as a hedge against possible dislocations in stock markets. Gold can be used as a hedge also against currency devaluations and currency impairments. And now you have, in many different countries, you have other problems. Take a look, Argentina and other Latin American countries are very interested for their gold mines in Chile, for example, north in Arica, and in Mexico there are gold mines. In South Africa has gold mines. There are other countries that produce gold. However, you can't make as much money as you can print money.
George, this is a very special day today because as we're speaking right now, I'm just checking that prices, gold has hit $2,000 for the first time in history. What's your immediate reaction?
Well, you're probably talking about October gold, because December gold, which has an open interest of 390,000 by now, because of the rollover from spot August, has been already in the $2,000 mark, which I had expected for the past year or two. And I think it's interesting to note that gold may have a new higher base level, close to $2,000, as we get further on towards U.S. elections and global problems not being solved, such as the U.S.-China tension increase, such as Middle East and North Korea problems. And if you look at what's happened in South America, you will see how gold is still gaining importance daily.
Let's talk about that, because you mentioned that the elections are coming out. That's going to be probably the major news story of the year as we enter a new political cycle. Now, I've talked to an analyst recently who said that regardless of who takes over the White House next, investors can expect a lot of volatility in the equities market. Do you agree with this statement?
I agree that we're going to have volatility, and we can have volatility in gold. I mean, take a look. The Bank of England is being sued by the government of Venezuela, where there are lots and lots of gold holdings at the Bank of England on deposit from Venezuela, trying to figure out a rightful government in Venezuela that may or may not have control of gold. And every once in a while, there are large gold sales. And so gold does fluctuate and can have at least a $20, $30 fluctuation at the drop of a hat when a lot of traders decide for technological reasons or political reasons to take profits. And there are others who are there to take their place, which is why open interest over time has grown on the COMEX. And I watch open interest daily in all the different months, because I want to see the flow of gold. I want to see the flow of funds into gold. And that gives me a better clue and understanding of the short-term implications of gold prices.
So, George, we've already talked about gold. What do you think about silver? We've seen actually silver outperform gold this year. Can this momentum continue?
Yes, and I think it's interesting. Silver was poor man's gold, and headwinds for silver were its industrial use, a lot of industrial use, much more than gold, although gold does have industrial uses to some extent, but silver has the most comparison to gold. And the lack of reopening economic markets and buying and selling of components that silver is needed in kept silver from performing well. But now, with more reopening and more business and more demand, especially from industrial sectors, silver has gotten a tailwind from what used to be a headwind.
But what about risk assets like equities? How do you feel about valuations now that we're seeing? Nasdaq, for example, has already hit all-time highs, surpassed all-time highs, and it just keeps going up. How can political tensions have any impact on equities?
Unusual headlines or unexpected political headlines or any sort of increases in tensions can affect the price of gold. And so I tend to watch those carefully as well. As far as stocks are concerned, I have to leave that to the stock analysts. Mm-hmm. But as some of my investors tell me, they do buy gold as a hedge against possible major fluctuations in the stock market that could be upcoming because of unexpected election results one way or the other.
Finally, George, as we enter the election cycle of November, what are some of the major risks that you're looking for that could impact gold adversely? Are there any catalysts that could bring the gold prices back down below $2,000, significantly below, I mean?
Well, when you say significant, yes, there could be. There could be taxes. There could be taxes on transactions. There could be other unknowns of having to sell gold in order to gain other currencies to shore up some countries' largely burgeoning debt. You could see gold being sold by hedgers, such as mining companies that need to finance and are unable to finance, but they access the markets by selling forwards. You will see how short-term gold demand can affect the price of gold up and down $10, $20, such as lower gold demand in India or lower gold demand in China possibly, or increased demand from central banks around the globe that need to shore up their own currencies that make the price go up. There's enough there for buyers and sellers.
Excellent. George, I want to thank you again for coming on the show. It's always a pleasure. And best of luck with trading and investment management. I know it's turbulent times for everybody, but I want to thank you again for all your work for the financial industry.
Thank you very much again. I was very happy to have been here. And remember, the price of gold to a lot of investors is a barometer of our economic and political well-being.
Perfect. Thank you again, and we'll speak to you soon. And to the Kitco viewers, I'm David Lin. Stay tuned for more at Kitco.com.